Good morning, 8:30 a.m. CET time. Hi, it's 17th of January 2017, so welcome in 2017. I woke up like 2.5 hours ago, but still just one eye open. Oh, gee. Anyway, guys, happy 2017. Especially good wealth. When the wealth is gonna be okay, the rest will come much easier. Green peeps in 2017, and let's start our meeting today. Hopefully I'm gonna to fully wake up within the next few minutes. Strong coffee didn't work out this time. Anyway, that's the third week of 2017, and most probably that's gonna be one of the most busiest weeks this year. All right, but before we go further, let's start with quick risk warning. Guys, trading FX on margin carries a high level of risk and may not be suitable for all investors. You can sustain a loss of some or all of your initial investments, so please do not invest the money that you cannot afford to lose. Seek education and gain experience before risking real money. However, past performance doesn't guarantee future results. All right. So we are done with risk warning. Let's start with calendar briefly. British pound in focus, no doubt about it. Okay. So even, or especially today, yesterday we saw the gap down on the pound at the open. So definitely pound in focus this week. And why? Okay, so we gapped down because of those leaks over the weekend about the hard Brexit from the Theresa May. Yesterday, some sources were trying to decline this information, but as we know, we do have Theresa May's speech today, later during the day. I didn't get the confirmation. But most probably she will start at 11:45 local time, so London time, right? So for example, for me or for CET time, that's gonna be like, if I'm not mistaken, 12:45. All right. So that could be the key today. We'll see. Before her speech, we do have CPI out of UK. 9:30 UK, 10:30 CET. And if it's not enough for pound traders, tomorrow we are going to get the unemployment rate and average earnings index. That could be the key. What else from the pound side? Friday we are gonna to have UK retail sales. All right, so that's all about British pound. So key today, Tuesday. So it's first UK CPI, then we have German ZEF index, then we have Theresa May, okay, and pretty much that's it for today. But I can ensure that I can assure you guys that we are gonna to have the very busy day, higher volatility. About the volatility, I'm gonna to tell you a bit more a little bit later. All right. And if we are talking about the inflation, that's actually CPI is gonna be in focus as well this week, because tomorrow we are gonna to get the final CPI out of Eurozone, and we are gonna to get CPI, US CPI, all right? So again, busy day tomorrow. And also this week, central banks in focus. Jeez, what a week. And first one is gonna be Bank of Canada, but of course Thursday that's Mr. Mario Draghi Day, and that's ECB Day. Okay, and then we have on Thursday we have some top tier 1 data as well from US, like building permits, Philadelphia index, unemployment claims, but most probably Mario Draghi will set up our day. And Friday, again, during the normal working hours, that's gonna be CPI out of Canada, but during the Tokyo session we are gonna to get Chinese GDP, and Fed Yellen will speak as well. So in case Draghi will weaken euro too much on Thursday, so Yellen during the Tokyo session may correct this euro dollar downside move eventually. And of course that's not it, because the key point could be from the I would say from the psychological point of view. So key point could be Friday, right before the weekend, Mr. Trump nomination and his speech. And the time is not confirmed yet, or I don't have the confirmation about the exact hour, but we'll see. So guys, now I can say that pretty much that's it from the calendar perspective. Okay. So now 2 words about the volatility, because I do expect huge jump in volatility this week, and especially with Mr. Trump, we shouldn't complain about the volatility for the next 4 years. in my opinion, and that's the overall market opinion based on his latest tweets. So if you have Twitter account, then definitely you should follow Mr. Trump. If you don't have Twitter account, it's time to create one and follow Mr. Trump, and of course follow Land of Trading as well. Of course, we are not volatility creators. Anyway, and because of this volatility expectations, I would say that might be good idea to have smaller exposures at the very beginning of this year. It might be that that's gonna be different year than what we already know. Okay, especially because of the volatility. So and also the smaller exposure this week will help you to determine if you can get back into the normal exposure, or market is really volatile and it's better to keep the exposure smaller. That's my suggestion. So I don't know if you are, I don't know your risk management, right? But definitely it's good to cut the exposure at least by half. And again, before we will start with charts, nothing wrong if you are gonna just watch this week what's going on the market, to try to read the market if you are correct, okay, and make the notes. So you don't have to trade, you don't have to force yourself to be in the market if you not feel comfortable. All right, so maybe better is gonna be a watcher this week, to try to wait for some kind of the confirmation which way market wanna go. Okay, that's how I see the thing. So we are gonna go through the charts, but again, me personally, I'm gonna be extremely cautious. So let's start. Let's start with the pound, because we are testing quite interesting levels. But first, I don't have such a big history here within the MT4. So what I'm gonna to show you, I'm gonna bring the netdania.com. That's the source. The website address is in the chat window right now. And I would like to show you the monthly chart of the British pound, of the cable. Have the monthly chart. And that's the possible demand. And that's the possible target for bears. Okay. So let's start with bearish scenario within the medium long term. So definitely this demand here could be the target this year. So let me tell you about the levels. That's in between 112.50 and 105. It's AB's right now, but so we have at least a chance for 10 figures, if not more, based on the current level. Okay. So that's the pound on the monthly chart. Let's get back to our charts, and just still one eye open. Anyway, I missed good trade opportunity around 23 after this Trump dollar sell-off. But then again, we have huge gap to the downside. Okay, there was no follow through yesterday to the downside, mostly because of the long weekend in US. So with lower liquidity, what market is trying to do is trying to close the gap, right? And that's good from the bear's perspective. So what we have, how can we approach this bounce from the bear's perspective? Okay. So first, as you may see, move lower. So we took out this demand. We were trying to rally, but again, we took out this demand here on Friday, and we gapped down at the open. So we have two latest points. We can create the fast line. All right. And right now, that's the third approach. We are above the trend line. That's good indication. That's good indication that market is trying to break to the upside. That's the attempt to the breakout. That's good. But what we see here during this move to the downside here, we had two different sizes of the correction, right? We had this type of the correction, and we had this type of the correction. So this one, it's what we are testing right now, and it corresponds with this dynamic possible supply line, this fast line. All right. I'm not short yet. Within the normal market hours, most probably, I would be short already at at the top of this box because of the size. All right, so I would be short right at the top, but because we are outside of the normal market hours and we tested this level twice already, I'm not selling yet. What I would like to see, move back under the trend line, before any action. All right. I'm trying to draw this line with as many possible touches as I can get. All right, something like this. So I would like to see move back under the trend line, and that could create trading opportunity for me to the downside, and then I would switch to the lower time frame, like 5 minutes or even 1 minute if needed, right? So based on the current situation, that's the fast line we are talking about. The problem with MT4 is that if you have an original trend line on 1 hour or 30-minute chart and you are going lower to 5-minute chart, let's say, it's redrawing a bit. Doesn't matter for now, because what I'm looking for is that's the Riley possible base and move lower to take out this demand. Okay, because what we did, that's the latest 5 minutes demand, Riley based Riley, right? Pull back into the demand on 5-minute chart, Riley back, and we are retesting this top of this box here. All right, so what I'm waiting for is to see we are going to take out to see this demand cancellation, consumption, whatever you want to name it. All right, so what we are going to have Riley base and possible drop below the demand. We have to see the drop below the demand. All right, so we are going to have clean Riley base drop supply formation. So that could be the first scenario. But because of the drop under the trend line, we may not see the Riley into that supply. All right. We may simply work on a double top formation. All right, and we may simply retest the supply based on the fast trend line only, based on this breakdown here, and we may continue to the downside, right? And because of this, because we are awaiting CPI, because we are awaiting Theresa May, if I'm gonna to have this kind of the setup, I'm gonna to trade it, but of course I'm gonna to trade it with very, very, very tiny exposure. So if I'm gonna to be hit with the stop loss, that's not gonna be a problem, because either I'm gonna be hit with the stop, or I'm gonna to have a huge drop, right? So even tiny position will earn money for me. Let's get back to 30-minute charts. What's gonna be our target, right? I'm sorry, guys. Now it's better. 1 second. One second. Where is our fast line? More or less like this. And we have one more trend line, possible trend line. So that's our fast line because of this move, and we have one more here possible. So drop, Riley, drop. So we have 2 points, and we can draw another. We can draw another line. All right. Just let me add a few things. The size is one thing. We also broke down through this support, through this possible demand, which worked out last Friday as well, and we are retesting this. If that was the demand previously, so after the breakdown, we do expect some kind of the supply here, right? So that's why the line here. So few things correspond with current level, and now few things correspond with this yellow line with next possible supply. Okay. The first, that's gonna be attempt to close the gap. Okay. As we have probably some stops, we may hit this level based on the size of the correction, which corresponds with the second falling line. So we may expect another supply, possible supply here. Okay. So we know where we are with pound from the bear's perspective. But we have to know what we are targeting, right? Where we want to go. All right, what we have to be careful about what we have to be careful about All right. 1, 2, possible 3, or 3 was already in place based on this V formation here. If that's number 3, we may create no touch. So I'm not counting this one. I'm not counting this one. So we may create the platform for potential squeeze, right? So if we are gonna be short based on the setup I described a few minutes ago, one more time, I'm not short yet. I'm waiting for the move back under the trend line. All right. So if I'm gonna to see the setup and I'm gonna be short and my stop will survive. So what I'm gonna to target? I'm gonna to target the bottom of this possible wedge. All right, and it's around 1950, 19 level. Okay. And around that level, I would close more than 50% of my position. I will explain in the second why. Because that's based on this type of deformation, we may expect some kind of the squeeze. All right. And usually the target for this type of the squeeze is point number 2 within that formation. All right. So again, we may squeeze to the second possible supply I described before. So actually right now the pound view is so clear, and I'm gonna make an update on Twitter later on. If there is any kind of the action, anything interested from my point of view. But right now, I would say that it's really very clear picture if we are talking about the pound. Now, I mentioned that I would close more than 50% eventually if we are gonna to get to that level. After such a move to the downside, this type of deformation, as I mentioned, is a good platform for potential squeeze. But if we are not gonna be able, because everyone is gonna to see, it's so clear, right? It's so this type of deformation is so clear that everyone may try to trade this potential squeeze on the pound. All right. It simply may not happen. It simply may not happen. Instead, we may see huge Niagara Falls. We are going to clean everything to the downside. That's why I would like to leave, if it's going to happen as we described, we are going to reach the target after the entry and blah, blah, blah. That's the reason I would like to leave very tiny position, smaller than 50% of the original size, right? I'm gonna to take, if it's gonna to work out, I'm gonna to take profit here for, let's say, 75% of the size of the position, and the remaining 25 will wait. If we are gonna to see the squeeze, I'm gonna to cut this remaining 25 as well. Okay. Now you may ask, Piotr, okay, what about bulls? And guys, first we have to close the gap. We have to close day above, and we have to close above this green line based on the daily chart. So for me, for now, one second. Okay, so for me, for now, based on the lower time frame, I know where bear may try to take the profit, and I know where bulls potentially may try to counter this bear move. Okay, and on intraday basis, on smaller time frame, I may even join this potential squeeze if I'm gonna to see attempt to go higher. But on a higher time frame, as I mentioned many times, within the intraday levels, within the stable, there is no change in view right now. We are in a bearish mode on pound. Okay. So the only, if anything is bullish, so I'm gonna to use this bullish idea simply to take the profit from shorts, right? Nothing here on the chart telling me to open the long position in medium or long term. Any questions related to the pound? By the way, London is open for 9 minutes already. We'll see. Yes. Yes. The question is, just to confirm, I'm waiting for short setup. All right. I'm gonna watch smaller time frame, and in my opinion, two possibilities. Right. So we have to be ready to for two possible scenarios. Either we are gonna to move down. We are gonna to clear the demand visible here on possible demand visible here on 5-minute chart. So Riley based drop, and we are gonna to see Riley back into that supply on smaller time frame. That could be the short. And the second short setup is based simply on possible double top, but the same. We had to take out the first visible possible demand on shorter time frame, then Riley back into the fast line, Riley back into the breakdown point, and that could be the short. And I can't tell you now what's gonna happen. I might be after this rally back here, I may take the short. Market may move higher. My stop is gonna be very short, so I'm gonna be stopped out here, right? So I'm gonna to open another one here. I might be stopped out here because of the Theresa May speech. I might be stopped out here as well. So twice, it may happen twice for me at the very during the European session. But that's, and as I'm expecting higher volatility, right? That's why I mentioned that the size should be much smaller. So even if I'm gonna to be stopped out twice, that's not gonna hurt me. All right. Cool. More questions? No. Let's go further. That's the dollar yen, but okay, we described pound. All right. Just 1 second, guys. We described the pound, so pound is in focus this week. Now let's talk about the dollar. Few seconds, but we have to start with dollar index. I don't have it here on the MT4, so we have to get back to net dania. We have to find dollar index here. Net dania is a simply free tool, very useful. So that's why I'm sharing with you here. The weekly chart, you know the weekly chart because I've been updating and I'm still updating dollar index on a higher time frame. I would say quite often. All right. So here on the weekly, just brief reminder. After this rally, we had this kind of the consolidation breakout, right? So based on the size of this consolidation, you know our target medium long term is towards 107, 108 on dollar index, right? And as of now, medium term, everything is clean here, but we have to switch to daily. All right, and we have to try to imagine possible situation here. As of now, still looks good, right? But there is a first scratch, I would say, on the daily chart. Because we are trying to go lower, close below this swing here. We have potential demand around 100 level. And do you remember from weekly chart, do you remember I've mentioned a few times that 170, 100 based on the weekly close is important from bull's perspective, all right? So as of now, we are trading at 194, so we are still above this level. But let's try to use our imagination, okay? Because what we may see on a daily chart, there is a danger of possible head and shoulders formation. Okay. And the size here is around 4 figures. So after the break of 100, we may go down towards 96. And that could be the problem for dollar bulls. Okay. But again, guys, that's our imagination for now. We are simply trading above the support. There is no reason to try to force dollar shorts yet. Okay, if we are gonna to turn short on the dollar, market is gonna give us the chance to enter the short position. No worries. If not, it happens sometimes that we have to miss few trades. Anyway, what is my thinking? So eventually head and shoulders, clear, bearish, 4 figures down. Okay. But what we may see here, because of the higher time frame, is still bullish, and on a higher time frame, on weekly basis, reminder, bulls are safe as long as we are above 170, 100 on a weekly basis. So what we may see within the next few days, is Tuesday today, right? So we may see drop towards 100, let's say. Tomorrow we may see some kind of the continuation, or we may see the huge drop today, bounce tomorrow, Thursday, attempt to break lower, let's say, right? So few guys will start to work out with this possible head and shoulders, and of course, if we are gonna to see drop below this demand here, all right, I'm gonna start to think about the short as well on intraday basis, on any rally, on dollar index, right? Because that's how we have to work. But that's the bearish scenario for dollar index. But guys, going back to the higher time frame, when the big boys will step in, maybe not this week, we are not gonna to finish this formation this week, but it could be around next Friday when the big boys will step in and they will try to save the dollar. That's gonna be visible, right? What I'm talking about? I'm talking about the right side of the head and shoulders. We may have clean head and shoulders as per many descriptions in the books, within the books, all right? Or we may have head and shoulders which is not described in many books. To be honest with you, I haven't found this description in any book. We may have this type of the head and shoulders where we may see megaphone formation on the right shoulder, and when when you are going to see this type of deformation on the right shoulder, that should be your first red light. All right. What I'm talking about is that's the standard head and shoulders. So usually the street is selling on the break of the neckline, right? Then their stops are above because that's what they get from the books. So the market makers will rally back to clean those stops. All right. We are going to have 2 points to create the line. We are going to have 2 points to create the line. Right. Then when the market makers clean out those stops, they are going to invite those sellers again. Okay, that was the false break, but right now we are going lower for sure. So the street will jump in and sell again. Okay. And we'll wait for the full size of the head and shoulders. But then suddenly, because of the possible megaphone formation, we are gonna to get back. We are gonna to clean those stops again. So that's stop hunt number 2. And because of the megaphone formation, after the third test, we are gonna to just retest the neckline, and we are gonna to go higher. And once we are gonna to break the head top, we are gonna to double this size, right? So what I'm talking about in this case, one is clear head and shoulders formation, so that's the bear scenario. But because if we are gonna to see the cleaning of this bottom here, of this demand, if this demand is gonna be cleared, then rally back, and of course I'm gonna to try the short here, of course. But I'm gonna be in a very comfortable situation, even with the possible megaphone on the right shoulder. I'm gonna be short, not on the break of the neckline, not here, but I'm gonna be short here. So I'm gonna to have plenty of time to manage my position, right? But I'm not gonna blindly trade head and shoulders. I'm gonna be ready for both bullish and bearish scenario, all right? So again, higher time frame weekly, bulls are quite safe. Daily there is a scratch. We may try to start thinking of possible head and shoulders in the future. We'll see how it's going to work out. Then the rest as I described. So again, we can go out and we can get back to dollar on the crosses, and let's start with dollar yen. Most probably you remember from Twitter, I've been bullish last week, and I did well with dollar yen live, even with the calls in advance on Twitter. Anyway, I made a mistake. I should trade with smaller time frame and should take more out of it. Anyway, key day for dollar yen in my opinion today. Okay, key day. That's the daily. That's the daily chart. And I'm still looking to around the current level, I'm still looking to buy. All right, I'm still looking to buy. I've mentioned on the Twitter about this possible McGuffin with this midline here around 117. Okay, we may also oh, not even, no, we may also, instead of the megaphone, we may also have the channel here. But if we are going to work with the channel here, then we have this bullish flag. If we are going to work with this megaphone, we should hold this bottom at least to test this 117, eventually higher. So, okay, from the dollar perspective, looks like dollar yen is the weakest dollar cross right now, in my opinion, because we are on a verge of the breakdown. And really the bulls have to do their job properly, and they should start to work with dollar yen right now. Okay, but it's not that easy when we are checking the US futures or DAX, right, where both are breaking down right now. So the yen crosses are falling as well. Okay. But then I think we are gonna to see, even if we are gonna to confirm the breakdowns on yen crosses, that's what we are gonna to discuss. That's what we are gonna to discuss with the next live trading room, which, by the way, is gonna to have a place on Thursday, most probably. I've got the hospital at home because both my girls are sick, so hopefully I'm gonna be able to on Thursday to be with you during the live trading room. Of course, the information is gonna to be sent out via email. Anyway, as of now, because of the current situation, I'm not forcing myself to sell. I'm still, based on this daily chart, I'm still thinking about smart buying. All right, what could be the smart buying in my opinion? What, Piotr, what you are talking about? Shit, man, we are falling. Yeah, that's very true. But as I mentioned, we should start to see if really bulls are thinking about moving higher. We should start to see first attempt to move the price higher, mostly based on this possible intraday demand within this daily demand. We are trying to break down this daily demand, intraday demand. But what we have intraday possible demand, we have daily possible demand, and we have weekly possible demand. But with weekly, we know, with weekly it works a little bit different. Simply we have to close week above this level, right? For big guys, doesn't matter if we are gonna to trade 5-10 figures lower, but Friday late evening, 1 minute before the close, we have to be above that level. Then that's the confirmation that we are good to go higher, right? So that's a little, that's the difference with weekly chart. So they don't care us. We may see the move lower, but then the big guys will step in and they will clean everything, right? But without us because of the stops. Anyway, I'm gonna to watch because it would be much easier for me to step in and try to go long with different Tokyo session. But we are going lower. We went lower on Tokyo, and we are trying to continue in Europe. All right. So I'm not in a rush to try to buy. Now within this green daily zone, intraday, I would like to see some kind of the action telling me, okay, maybe it's good time, because right now nothing is telling me that, come on, let's jump in and be long. Intraday, it would be rather smart to look for selling opportunity. But because of the bottom of the channel, because of this daily possible demand, because of this possible intraday demand we are right now, within this demand we are right now, because of this weekly line, come on, I'm not in a rush to sell here, all right? So simply I'm in a wait and watch mood, and if anything happened here on dollar yen, I will make an update on Twitter, all right? All right. The number one pair, euro dollar. I'm sorry that we didn't start with euro dollar at the very beginning. Simply because I think pound is in focus right now. Euro dollar still got the time till Thursday. Okay. And also the reason we didn't start with euro dollar is simple, because of the pound, because of the overall pound weakness. Okay, let me clarify. Because of the overall pound weakness, there's a natural thing that we are going higher on euro pound. All right. And as long as euro is supported because of the rise on euro pound, I do expect some kind of the wide consolidation or wide sideways move on euro dollar, and I'm gonna to watch extremes before I'm gonna to be involved. All right, and what those extremes on euro dollar? Based on this daily chart here, I would like to see move higher above 107 towards 107.30, maybe a little bit higher, and I would like to see failure there. Then I would switch, let's say, let's get back to 1 hour chart. Okay. So we tested this zone around 107 few times already, and we are trying to go higher right now. Okay. So what I would like to see, this 107.30 to be cleared out to the upside. So I would like to see some kind of the breakout, attempt to break out. All right, some stop hunting. You may see the green line based on the daily chart here. You may see this broken swing here, so that's possible supply for us here. All right. So what I would like to see is simply the attempt to break out higher towards 107.30, 107.60, maybe even towards 107.80, 108, somewhere here, right? And I'm gonna to watch how euro dollar is behaving within that zone on a smaller time frame, right? So once I'm gonna to see Riley based drop on 10-minute charts or 5-minute charts, that's gonna be something interesting from my perspective, right? But I would say it's gonna be tough to trade euro dollar before Thursday. The only thing which may change this situation is that we are going to get an answer what's going on with the pound. I mean, if we are going to get the turnaround on the pound, right? So if the pound will turn around because Theresa May will clarify everything, and that's not going to be hard Brexit, that's going to be very soft Brexit, that's going to be maybe not Brexit. I'm joking right now, huh? But if something going to happen with pound here, we may see euro pound profit taking may help to move euro dollar down as well before the Draghi, with expectations that he will try to do whatever he can. But we have to be extremely cautious with this whatever it can, because I would say this time the only words are not gonna be enough, and one of the scenarios we are going to discuss it probably on if we are going to have a live trading room on Thursday, then we are going to have it before the ECB, and we are going to discuss those possibilities. But we may see only retest of this bottom towards the Thursday, right? And if Draghi disappoints the market, then we may confirm. Let me switch to weekly. We may confirm that this breakdown here was the false one. Maybe. And we may see the rally back towards the top of this consolidation over some period of time, not on Thursday, of course. All right. So that's how I see. That's how I see euro dollar, and I would like to see what's going on extremes. Right now, nothing is telling me that I should be involved here, so I'm watching pound, and I'm enjoying pound. I'm gonna to watch dollar yen, which trying to bounce around. We'll see. All right. So I'm gonna to focus on those majors at the very beginning of this week. Closer to the Friday Tokyo session, where we are going to get Chinese GDP and closer to the Trump inauguration. I'm gonna to check Aussie and Canadian as well. Because I think if we are going to see the action and if we are going to be about to change something, then right before the weekend, when the big guys will step in and they will try to confirm, right, what they want to do next week. So that's how I see the things on the majors. I'm not in a rush to trade. That's the very important thing, guys. First, I do expect the volatility will jump higher. So because of those expectations, my exposure is gonna be, my exposure is slow anyway, but I'm going to work out with this exposure. And because current week we have plenty of risk events, I'm not in rush to be in the market, right? This week the strategy based on the jump in, jump out, right? Hit, run, bomb next. It could be this type of the trading this week. So again, if you are not comfortable with this type of the trading, maybe would be better just to be on a wait and see mood this week. If you have some kind of the expectations and the market will go your way, then you may say, oh, Piotr mentioned that maybe it's better to wait and watch, blah blah blah, and market went 300 pips my way. Okay, but you are gonna to get the confirmation that within those tough environment we have right now, you are able to read the market, and that's the important thing, right? It's a normal stuff to miss 1, 2, 5 trades, but the good thing is that you are able to read the market correctly, because believe me, I think, and market showed us already, because of one of the reasons, of course, that could be good excuse, and we can talk about this. There's gonna be pluses and minuses, and some guys may agree, some may not agree, but next 4 years are gonna be different than what you saw before. So I'm on the FX market since 2002, right? So it's 15. Usually I'm saying I'm around 10 or 10 plus. Right now it's 15 years, right? And I'm watching through those 15 years, I'm watching those charts 8 hours, at least 8 hours per day. So really, I saw a lot of different things on the market. So for me, believe me, if I'm saying that it's gonna be different, and if you are especially if you are trading for 2 years or you are trading for 3 or 4 years, and you haven't seen many things, but actually the last 4 years was quite good because we had a Swiss National Bank unpacked the level, so you were able to see the crash. If you haven't learned anything, then you had a chance to crash with Brexit, then with pound flash crash, with pound gap, blah blah blah. All right, so it wasn't that bad, but there are gonna be changes on the market, and because of the tougher regulation as well, right? We are gonna to see. We had a discussion within our team, and we agreed that the most probably 2017, maybe 2018, we are gonna to see more this type pound flash crashes. So if someone is telling you trade 3-5%, fuck, come on. It's either taking the money from the broker or he has no idea what he's talking about, right? Because there is nothing extraordinary to be on a losing side 5 times in a row. So 5 times in a row, so if you are risking 3-5% per trade, right? And you are 5 times down in a row, then fuck, you are down 25%. And you are starting to sweating, thinking, and you are not able to your hands are shaking, and there are gonna be no rationality behind your next move. Okay, so guys, come on. That might be good on stocks maybe, but not on FX, okay? Okay. So 99% we are going to have a live trading, one more live trading room this week. I'm not able to tell you if it's going to be Thursday because yeah, as I mentioned, I got the hospital at home. Ideally, that's going to be Thursday. Maybe even we are going to be able to cover the ECB. So maybe we are going to make we are going to be able to make like ECB event. But that's something I'm gonna to think about a little bit later today or tomorrow morning. So then you can expect email. 99% we are going to have a live training room, no doubt about it. The thing is when, all right? So let me think about that, and I'm going to let you know. First, maybe I'm going to announce on Twitter, and then of course you are going to get an email. So I'm focused on pound mostly right now. Then I'm watching dollar yen and waiting for extremes on euro dollar. So from me, that's it today. So 2017 officially is open, right? So that was our first live trading room. If you have any questions right now, that's a good time. If not, I would like to say big thank you for your time that you joined us today, that you found time to join us today. And I'm pretty sure that first, that's gonna be volatility, but volatility is what we are looking for. But we have to be on the right side of the market, and that's it, all right? So that's it from my side, guys. Thank you very much for your time. And see you again this week. Thank you, take care, have a good day. Bye-bye.